Hey guys, what's up? Alec back with the daily stock market, and look at that. We had a super green day today with plenty of stocks that were up over 5 to 10% just on the day. Upwork up 13%, Unity up 11, Lucid up 11, Shopify up 10%, Rivian up 9%, Lemonade up 8%, SoFi up 7%. The list goes on and on and on of stocks that were up on the day. Today, what we're going to be talking about is a deeper dive into electric vehicle stocks. We're going to talk about 5 different electric vehicle stocks: Lucid, Rivian, NIO, XPEV, Li. So there's going to be some Chinese stocks sprinkled in towards the end of the video. Make sure you stay throughout this entire video if you are an electric vehicle investor. And some of the stocks in this video, like XPEV and Li, have not really been talked about in a while in the stock market. So let's dive in and see what's a good deal in the stock market out of electric vehicles. But before we do that, smash a thumbs up on this video, share with a friend, subscribe with post notifications on so you get alerted anytime I put out a new video. Okay, and the first one up is Lucid LCID, up 10% on the day, 18% on the week. Last 3 months, they're down 32%. So remember some of these numbers because we're going to be comparing all of these stocks against each other. And in the last year, they're pretty much at a 1-year low. All right, they were as high as $52 in the past. And they IPO'd in 2020 for $10 per share. The market cap is $32 billion. And a lot of stocks we're talking about in this video are going to be between the $20 billion and $30 billion valuation. So they're all pretty much comparable to each other. Here we can see their negative earning company. They got to profitability actually briefly last year at about 1 cent on the EPS. They just IPO'd, so a lot of the numbers aren't available yet, but for total revenue, they've actually done $27 million in total revenue, Lucid, and they're negative $2 billion in net income, and their total assets are $7.8 billion. Total liabilities are $3.9 billion. So feel free to write down those numbers so we can compare it against Rivian next. Okay, so now if we pull up Rivian, RIVN, we have them up 10% on the day also, down 25% in the month, down 72% in the past year, and they're well below their IPO price of $100 per share. Okay, they're only at $30 per share right now. Market cap, $26 billion, so it's pretty even to Lucid. And as you can see, the EPS is lower than Lucid as well. The last 3 quarters, they've been extremely unprofitable, negative $5 EPS, and recently they came in at negative $1.43 on the EPS. So total revenue compared to Lucid was $250 million. Here we have Rivian pulled up, only $55 million in total revenue, so significantly less. Also, they're losing more. Remember, Lucid was only losing $2 billion. Rivian here is losing 4.69. However, the assets to liability for Rivian that we have pulled up right now, they have one of the best balance sheets in the market. They have $22 billion in assets, and they only have 12% of that, which is $2.7 billion, in debts and liabilities. So I wouldn't be surprised if they start taking on more debts and liabilities in the coming years, and that could ramp up their revenue a little bit more. But overall, I think Lucid is looking like a better deal in the stock market compared to Rivian. Although Rivian is down considerably from their IPO, they're definitely down more, down 72% in the past year. And from all-time highs, they're down like 80-something, 84%. But since they have the same market cap, we were comparing the net income and revenue against each other, and Lucid came out as the winner. Now let's talk about NIO next, because they're $16 per share. They're up 22% in the past week, but they're down in the past year 49%. And from all-time highs, they're down around 70%. They IPO'd at $6 per share, so they're still up from their IPO. You can see they also have a market cap of $29 billion, so pretty close to Rivian and Lucid as well on the market cap. We see that their profitability, their EPS, is a little bit closer to Lucid. Remember, they're on the brink of profitability. They just reported around 10 cents negative EPS, so they could easily get that up to a positive EPS, even if it's only like a 5 or 10 cents positive EPS. Now, if we look at total revenue, then NEO is by far better than Lucid and Rivian combined, okay? Because look at that revenue. They've done 1.1 billion in 2019, 2.4 billion in 2020, which is 120% growth, and they had another 100% growth year in 2021 to 5.6 billion. If we look at their recent quarter, just in one quarter, they did 1.5 billion in one quarter. So if they keep that up, they get at 6 billion in 2022. Okay, so they are a revenue monster. Their net income, okay, they're losing 600 million per year consistently. They've been doing a little bit better since 2019 to 2021. If we scroll down to the balance sheet, they have 13 billion in assets, and the liabilities is 7 billion, which is around 50%. So overall, I put NEO as a better rating than Lucid and Rivian because they've been growing revenues. They have revenues reported 10 times the revenues of any of the other ones that we've already talked about in this video, and they have a whole China market to establish as well. NEO could easily be the leader in the China market, the EV sector. So they also get a green check mark there for having expansion in the international sector for electric vehicles and being one of the leaders in China. Okay, next up we have Li Automotive. Li Auto INC, $23 per share. They're up 9% in the past week, by the way. They're down, actually in the past year, they're up 28%. So this one might not be as good of a deal, or you might want to be a little bit more patient for this one. For Li to drop below their IPO price of $15 per share and closer to a 52-week low. Okay, the market cap is 25 billion, but let's jump into the numbers and the EPS and everything because that's really what's going to be important when looking to see if Li is a good deal. Okay, so right now they're actually in profitability. They're at 7 cents positive EPS, and it looks like they've been positive for the last 3 quarters, which none of the companies, the electric vehicle companies that we looked at so far, none of them are positive earning companies. So that's a green check mark for Li. And here we also have the financial details pulled up on the revenue. So in total revenue, we have 4.2 billion, which is pretty much on the same level of revenue as NEO was doing. So automatically, I like them better than Rivian and Lucid at the same market cap, or maybe even a little bit lower than Lucid and Rivian. Here we can see that they are pretty much a negative earning company the last few years. But remember, recently, just in the last few quarters of 2022, they've been reporting positive earnings on their profits. Here we can see gross profits at 370 million. We can see total revenue 1.6 billion. So that's the most recent quarter of earnings, and it looks like they're definitely doing better. Their net income, for example, is now 46 million, okay, for the quarter. So instead of being negative 50 million, they're at 46 million. So this one, honestly, it's hard to say if NEO is going to be a better deal or if Li is going to be a better deal, but I'm liking the way that Li is starting to shape up when it comes to revenue, when it comes to EPS, when it comes to a positive earning company. They're moving along a lot quicker than something like NEO was, and they're definitely better, in my opinion, than Rivian and Lucid. The balance sheet's also solid with 9 billion in assets and only 3 billion in liabilities, which is insane because they're only at 33% liabilities to assets, which is a great number to be around. Personally, you guys know I like to be in that 20 to 35% range. So anything under 35% is really good, but oftentimes it's hard to find companies with 50% that's liabilities to assets. So the lower the liabilities, the higher the assets. the lower the ratio is going to be, which is a good thing. And the last one we'll talk about is XPEV. So let's compare them against each other to the other ones. Here we can see in the past week, they're up 9%. And in the past 3 months, they're down 40%. So if I just had to guess, they're probably not as positive earning as Lee is. That's probably why Lee hasn't been hit that hard, is because they are a positive earning company. Keep that in mind. They're basically at the IPO price right around $23. They went as low as $17. So under $20 could be interesting. We also have a market cap of 21 billion, kind of in that same ballpark of all the other stocks that we've talked about on this list so far. However, they might be a little bit lower than some of the other ones. We see that they are trending downward quarter over quarter, further away from profitability. However, they're pretty close to profitability overall. They've reported like negative 25 cents EPS, negative 10 cents EPS. So to get to that positive earning, 5 cents, positive 8 cents, positive 15 cents, probably won't be too many quarters away for XPEV, and that could really help the share price go a little bit higher on XPEV. Now keep in mind it is pronounced XPing, but I like to say XPEV because that's the ticker symbol. It's easier to remember. So in the last 4 years, they've been a public company since 2018, and you can see the growth has been slower than Lee. They don't have as much revenue as Lee. Lee has like 4.1, XPEV has 3.3, Neo is a little bit higher as well, and the net income is worse than a Neo and Lee. So XPEV overall gets the number 3 spot. They have a good balance sheet also. So XPEV, Lee, and Neo, I think, are all great companies to invest in overall. However, I want to see that them fall, especially I want to see Lee fall more. I want to see Lee fall like 25%. Neo is already taken a bashing, but I think they are pretty much on the same level as Lee as far as revenue goes, as far as net income goes, as far as the balance sheets go. So they should have around the same market cap, which they pretty much do right now. Neo and Lee are my 2 winners out of this video, and I want Lee to fall a little bit more. I would like to see Neo even fall a little bit more, closer to 20% dips on Neo and Lee before I start buying in for long term. So I hope you guys enjoyed that video. I would also like to see Lucid and Rivian fall significantly more, like 30%, 40%, continue to fall over the next 1 to 2 years before I buy in. Remember, it's not like a guarantee that's going to happen. That's just my personal goals. This is not financial advice. These are just my personal thoughts. But thank you guys for all the love and support you guys have been showing on my YouTube and my Instagram. We're now at 165,000 followers, and we have 1,500 close friends list members. So we have a bunch of people on the close friends list that are still making money even when the market's going down. Here we can see some recent posts, still making money when even the market's going down. DM me to join. Appreciate the 70% up on my TQQQ put. Hey Alec, hope you're doing well. TQQ put is printing, and this was just yesterday replying to the close friends list. I posted a whole stock market update is what he replied to, and DM me to join the family. Good call, TQQ. So DM me if you guys want to get on my close friends list and see what I'm buying, when I'm buying, what options I'm buying, what strike prices, price points, expiration dates, and everything in between that you could possibly know. If you're just a beginner investor, that's perfect, because I work with beginner investors to get to a more advanced level. Just DM me, say you want to be a part of the family. I have some discounts going on right now that I'm going to be raising the price. I haven't done discounts for over 2 years. If you watch my video, the only reason I'm doing discounts right now is because the stock market is down. So to help you guys out, get in the program, I did a little discount. But the stock market is going to start heating up here in the summertime and the fall. So you definitely want to get in before the stock market starts to heat up, because you want to buy low and sell high. That's one of the most important things. And I'm probably going to even start making that my tagline, just to remind everyone how important it is to buy low, sell high. Share this video with a friend. Smash the like button on this video. Comment below. Buy low, sell high. And remember, don't time the market, buy the market. Peace.